Good morning. I hope you're doing well and welcome to today's edition of the London Session Open. Today is September 14th, 2018 and it's 9:17 a.m. in London when we are hosting this presentation. We're going to provide you guys with a quick update on the markets. My name is Alejandro Zambrano. I'm the Chief Market Analyst here at TradeCaptain.com. Some of you guys might know me from Daily FX and FXCM. I used to work for Daily FX between 2009 and up until 2016. After that, I was running my own signal service and research service for a while, and now I'm with TradeCaptain.com. Okay, before we take a look at the markets, I need to stress really that trading financial markets unfortunately is high risk, and we may lose all of our invested money, so please bear that in mind. I'm going to begin with the euro. So yesterday, there was no major surprises from the central bank of the European zone. Of course, they are going towards normalization, which means a lower, less quantitative easing starting from October and end by the end of December. So no QE, and potentially raising interest rates by end of next summer. It sort of depends exactly where the economy is at. And sometimes it's not just about the actual actual interest rate. Obviously, that matters as well between two countries. But sometimes it's just the change from suddenly looking to have a very, very aggressive quantitative easing and stimulus program to suddenly looking to actually normalize things. The rationale is that some, for example, German bonds that were negative before, they were not accessible to investors, so they were forced to move elsewhere where yields were positive. But now some of these are starting to tick higher again and they're back being positive, so it's perfectly fine to actually buy these bonds. So there's many different factors. In fact, people don't really know exactly what influences currencies in the very, very short term. It's just in the longer run, I'm talking about 5, 6 years, 10 years, then we have a rough idea of where a currency should be trading at. So in regards to the euro right now, technically, and to trade this, the dollar's it's definitely under pressure. People are sort of giving up a bit on the dollar slightly, and we can see that because we have a bullish trend in the pound dollar. And the Aussie dollar yesterday ended its downtrend as well. So starting to see some shifts in the sentiment here and in the positioning of people. And the way I look at it is in the following way. If we take out the July 31st high of 117.52, then that could potentially open up for a further push to the upside. And usually, many times, the retail trader tends to get it wrong. So if the market is going upwards, they don't tend to be long, they tend to be short. So right now, 60% of traders with amount of capital are long. So they're sort of supporting this move. But if in the next few days we see a shift here in this positioning, so suddenly people are short, then they would help me and strengthen the idea really that we have a valid breakout here. Because the retail trader, when the market is trending sideways like this, they will tend to get it right. But when the market starts to do something like this, then they tend to get it wrong. And it's these sort of moves that I find interesting. When you sell and then it just goes and goes and goes and you make a huge profit. You do 1 or 2 of these a year and you get it really right, then you're up with 20% or something like that here. Sort of depends exactly how you trade, of course, but you do very, very good. You definitely beat the stock market and most other markets, and that's really what I'm looking for. I'm hoping that take this out, then we'll get something like this, or maybe something like this that would take us higher. But we need to break this section here. Now here's the pound versus the USD. And a few days ago, we said, when the market took out this high, we said, look to buy down here. And I think it's perfectly fine now to reduce the trend defining level to the September 10th low, September 11th low, sorry, down here. And that would be the new trend defining level. And that's also the stop level, which means that if you did buy down here, you literally are having a break-even trade right now. So it's very, very simple. It's very straightforward. Now, we're not that far away from the profit targets we discussed a few days ago. So people that are scalping, they're probably going to book profits here. And then we'll see what happens. If we go down to the August high, the way the market looks right now, in other words, bullish about the September 11th low, I think traders probably going to buy here again, then attack the high and maybe up to all the way up to 132.13. And then I think we would need to see many times, at least the way I've seen it, is that you have, like this one, a very strong decline in the market, so very strong bearish trend, and then you have a waiting period where the market trades sideways, and then it decides here, not the same, but almost like all the way up, then all the way down, and then all the way up to test that, and then you have a collapse. So to some extent you have from January up until April, technically speaking, some sort of sideways market, and then you have the break and that easier part. And again, this is the better part to trade, I think. So here it's the same. This market just went all the way down and then all the way up, which again is a bit, it's not weird, it's totally fine, but would it be that unsurprising if the market goes a little bit higher and then eventually tumbles all the way back down to the low, and then from here it decides if it wants to go up, and then if it obviously takes out the high. So if it does something like this, so imagine it is here and then it goes a little bit higher and then eventually does this, and then you'll have some sort of a resistance, support here and resistance here. That would not surprise me, and this is actually what I prefer, because then if the market indeed goes higher, we'll do this. On the other hand, if it wants to break lower, we'll do this. So I think we're here somewhere now. We're here. This is where we are. This section here is here, and eventually that down is that up, and then we'll see what happens if it wants to do like that. So with that in mind, that's why I didn't trade this move here. I did trade pound New Zealand dollar, which made more sense technically. And here I'm just going to wait, and then we'll see what happens, I think. Of course, it has been occasions where the market just does like that, without a doubt. But if that actually happens, then my pound New Zealand dollar position is going to do good anyway. So that's sort of my 2 cents. Now today we're going to focus a bit on the dollar yen as well. The dollar yen, trading sideways here for some time, and then it pushed to the upside. And technically, when you take out a high here, of course, there's not going to be too much action at 7 o'clock London time. At 7 o'clock London time, the London desk has left the office. It's in the middle of the night in Asia, and New York as well. Things are starting to slow down. So there's not too much momentum usually at this time of the day. So it's not unsurprising that the market is done with the way it did. Now, I think at the end of the day here, we have a bit of a bullish momentum, and I'm going to remain bullish as long as trade above 111.34, and I think we could potentially head to the upside. Am I though super enthusiastic? No, I'm not. I suspect again that we're dealing with a bit of a mixed market over the next week or two. I think the market needs more time to sort of figure things out, because this is the Aussie, by the way, and the Aussie dollar, as you can see here, was trading lower, right? It's creating these lower and lower and lower and lower highs, but it took that out because of comments or that news that the US and China are about to have a second round or another round of talks. Of course, Donald Trump afterwards said yesterday that, if they have a meeting, they have a meeting. If it doesn't happen, who cares? That's more or less what he said. And he's gonna talk like this because of midterm election. And then after that, maybe he'll try to push for some sort of a deal. And we should not also forget that Donald Trump is interested to have some sort of a deal, okay? He's not interested in trade wars. Generally, he's not. I don't think so. He just uses that as a means to an end. Which means, again, here, things could easily in the Aussie dollar, push higher, and we'll touch that August 31st high. And the trend is short and bullish above this low here. But if this goes up and then goes like this and then traces a little bit more sideways and then figures out what it wants to do, then that would not surprise me at all. Because again, it's not very common that you have a downtrend like this one and then you just morph into a buy move. Very seldom does this. Could do something like this, of course, but it's very seldom this happens. So that's why I think taking a step back and being a bit cautious is probably a good idea. Here is gold, and gold, the gold price was trading sideways here, took out the high, and the market moved upwards, and then it corrected. I just took a simple fit from the low to the high. You can see we touched that 50% correction level. It might go down again to this level, but as long as it's above this level here, I'm treating this as an uptrend, and I think we could potentially reach 1225 as long as it's above this level. Again, not too much momentum here, but the trend is mildly bullish, much like the pound versus the USD. And here is West Texas crude oil, and there are various patterns here that are in play. I definitely think they're influenced by this large hurricane, big storm about to hit the US, if it hasn't hit the US already. That is influencing crude oil markets, but we are stuck in this big triangle, and that triangle suggests to us that we could easily remain trapped here for longer. You can also see some sort of a head and shoulders. This is the head, and this is, I guess, some sort of a left shoulder, and this is the right shoulder, and then this is the neckline. The difference between the head and this is the target, which is the same you can see here. So this level here is interesting for this triangle, and it's interesting for that head and shoulders pattern. So this is a key level to watch, which is 71.42. We just need to break that level. Until that happens, I think it's fair to assume that this market will just trade sideways, really, between this low here, 64.46, and this high. Here's the S&P 500, and I think it was 2-3 days ago I got a question, can we sort of take a look at it, and we did. And the way I was looking at it is that you're dealing with a big picture uptrend, which is this one. So this big picture uptrend, right? Now, ideally what we do is that we don't trade when the market is correcting. We don't just want to be buying blindly. You can do that. That's when you just buy a dip. But I was a bit cautious here because the German DAX was moving to the downside, and you had as well Spanish stock market was down, the Chinese stock market was down. It looked like we were going to have some more stock market turmoil, and because of that I said keep an eye on these highs, and when the market stops creating these highs, that's when we can look to turn bullish. And you can see here the market breached this level, and I did an update on that, and I said that if we correct but remain above this level, we should be okay, and then we should be able to hit this high. We just hit that high and that target because we had that pullback. Now going forward, this is a 2018 high. The US economy is doing really, really, really well. I see no reason why we can't move higher when the trends looking the way they look like, and as well with the German DAX looking to have stabilized. So I think if people are scalping, definitely I think one can book some profits around here. And then if we go down again, I think traders are going to buy, and that is if we go down. Doesn't mean that we should sell. I'm just saying if we move back here, I think traders are going to buy, and I think we could head higher. Now this is the DAX 30, and the DAX 30, I was hoping for a big decline. I wasn't trading this directly. I was trading the Spanish stock market, and this is a descending triangle, low, low, and then you have this trend line. So you have a break here, and that should have just pushed us to the downside. But you can see here the market has done a retest and is pushed back into the actual triangle, and this would have been a good level to take a step back and just close that out, the break even. And here potentially this market could squeeze itself higher into the triangle, but at the same time, if the market does not really push much higher and we have some sort of a break to this little uptrend, so we stop creating these lower highs and we do maybe something like this, then this could easily happen. And at that point, probably down here, I guess, looking to sell again, we'll just stop above the high and then we'll target these lows. It's only if this market just heads deeper into the pattern where I'm not gonna do that. In fact, if it spends more time in the pattern, I think it's just gonna go up higher. And then we would need to take a decision on what to do here at that point. But it's not super interesting because it's pushing to the upside and people are looking at these highs and say, you know, I don't want to trade against a downtrend. So what do they do instead? Well, they look maybe to buy the S&P. Okay, final market is Bitcoin. And Bitcoin is moving up slightly, without a doubt. It's moving up and looks to me that maybe in the short term, you know, we'll pull back a bit. And Treasury is going to buy and lift this maybe to 6,800 or 7,000. But this is going to be some real fireworks here at one point. And we'll see exactly. I guess if it takes out the September high, you know, we would have pushed higher and then down and then potentially up again. The alternative, which I think is more likely really, is that we might take out the low here and then tumble down to 3,152. You may say, why do I think that? Why am I so pessimistic? Well, because if you look at something like Ethereum, this is Ethereum. This is a log chart, and we sort of breached these levels, and we're definitely in a downtrend here. And the reason why Bitcoin is moving higher is because you have all these oversold markets like Ethereum and Ripple and IOTA. They are bouncing, but they're all in a downtrend. They're all moving lower like that. So they might move up a bit and that will help Bitcoin to stabilize. But I think eventually here, this will probably continue to move lower. I'm not saying it's going to go back to $11 or $12, but if it does, then this would not surprise me at all, because it's a system network where you can run applications and you can do your own ICOs. But if no one is using the applications, I think the most popular apps have about 500 users, then something is wrong here. You have millions of people buying and holding Ethereum, but out of these million, the most popular games have 500 users. And I think across the whole network, I think it's about 9 to maybe 10,000 users on a daily basis. So as you understand, nobody's using this. This is just a shell right now. Doesn't mean, of course, that in 10, 20 years from now, it might be the preferred system, but right now it's just a shell. And people just betting on this, hoping that somebody else is gonna do it. But I think if people were, you know, genuinely believed or genuinely find it useful, then all million of people that literally hold this market, why don't they actually use the applications, or, you know, why don't they use them? And they're not doing that. So with that in mind, I suspect that, you know, maybe Bitcoin will bounce a bit, but then eventually you have the resumption of the bearish trend against all of the cryptos, and you have a steeper decline. Today at midday London time, so in about 2 hours and 40 minutes from now, we're going to have webinar on cryptos, and here you go. That's the little advert. So what you need to do is you need to follow this handle. It's not going to go on my handle. It's going to go via the Trade Captain handle. So follow Trade Captain. I'm going to retweet it now so you can follow it. And what's going to happen is I'm going to go live and you're just going to get a notification. And if you're on your PC, you'll see it here. And as well, if you follow us on YouTube, you'll be able to see it there. But it's not advertised on, you can't see it directly from the Trade Captain website. As well, yesterday I did a little video for sort of a recap. You might remember I used to do this in the past, a little review by the end of the session. I'm probably not going to do it every day, but I'm going to do, I did one yesterday. So for any sort of extra bits of information, it's important you follow us on Trade Captain and on YouTube. Okay, is there anything today in the economic agenda that we should pay attention to? Well, Carney is going to speak at 11 a.m. and I think he did have a speech not so long time ago. I think he even published some article in the Times yesterday, and not sure he's going to shed too much more information about what's going to happen with the Bank of England, but that's always going to be out. So we're going to cover that here on Trade Captain. And we have as well retail sales from the US. What you want to keep an eye on is retail sales control group, which is an adjusted sort of measure and is really what goes into the GDP and is what the Federal Reserve focuses on. Because a lot of, I don't remember exactly how this is constructed, but I can tell you right now that retail sales and retail sales including auto, it includes inflation. So if you have a 2% inflation, everything that makes up retail sales, if prices have been increased by 2%, and now, say like one last year, they sold for 100 million. Now, all prices have been raised by 2% since last year. And then they sell for 102 million. Now you would say, wow, they bought 2% more goods. But no, it's just the dollar amount that has increased. And that is because of inflation, because everybody raised prices. And that is the issue with these indicators. And if I remember correctly, the control group is not like that. So this is really what people are focused on more and more and more. On the other hand, you have industrial production, which has a nice, neat correlation with GDP. And this is not influenced by inflation. Here it is. Okay, so last year you sold 100 million products. How many products did you sell today? And then that's how it works. Of course, the problem with that, though, is that with the benefits of innovation and things like that, maybe you sell more or maybe you sell less. It sort of really depends exactly what sort of innovation it is. Anyhow, this is quite interesting. All of these data is interesting. As always, you look at it and just see if the market is breaking any levels. Is it bad enough so the euro breaks to the upside, or is it good enough that we have some sort of pullback into the middle? We just need to sort of wait and look at the markets. Okay, I'm just going to see if we have any questions. Okay, so no questions, but we do have a good morning. Good morning, Maurizio. Thanks so much for joining me this morning. I hope you have a good day and a good weekend. And I hope to see you tomorrow, not tomorrow, but on Monday morning at 9 a.m. We have at Wells David with us as well. Good morning to you, sir. Thank you so much for joining us. Good to see you. New faces as well. It's awesome. Good. Guys, thanks so much for joining me. I hope you enjoyed the update. Don't forget to like the video. And again, make sure you follow Trade Captain later today. Because we're going to do a special update at midday London time. The handle is tradecpt.com. Thank you so much, and see you guys in a few hours if you wish. Thanks.